Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Friday, August 20th, 2010. So what do we see to end the week? We start with the euro dollar and we see that it extended its declines or moved in favor of the greenback, especially in the European session, breaking below its recent support at 1.2740. Now, European equities sold off, but we also had some dovish comments from ECB member Axel Weber. Overnight, around 5 a.m., when we did have this sharp move in favor of the greenback in this pair, we heard him say in an interview with Bloomberg Television that the ECB should help European banks through end-of-year liquidity tensions before determining in the first quarter when to withdraw emergency lending measures. His comments sent the euro, along with riskier assets such as the Canadian dollar, lower because they suggest that the ECB will support the region's banks for longer than some investors had expected. Weber's comments also suggest that even hawks on the ECB's governing council, we must remember that Weber is the head of the German Bundesbank, are still more concerned about the fragility of the euro area banks, which investors worried would be infected by the region's sovereign debt crisis, more so than they are worried about inflation. Weber said that it would be wise not to change the bank's policy of providing unlimited liquidity at its 3-month refinancing tender in October, and said that most of the discussions about the continuation of the exit will be focused in the first quarter. So following last week when we saw the pair move sharply in favor of the greenback as investors in the market priced in some weaker global growth, this end of last week and most of this week we had some consolidation, and in today's session we actually broke below the support of that consolidation range. So that could open up the euro-dollar pair for further weakness, especially if we move back up and retest this level of support and it holds as resistance. If that happens, we could see the pair targeting our lows from the middle of July 12th around 1.25. If we look at this pair in a daily time frame, we see that that level around 1.25 or a bit below 1.2460 say was an important level of resistance in the middle of June. Then we broke above it in early July, and now we may be retesting it to see if it'll hold now as support. In any case, we do have a very big red candle to end this week, and that should mean further declines in this pair. If we take a quick look at some of our other euro crosses, we see that we end the week with very strong euro strength. So here we're looking at the euro pound, and following an attempt to rally coming into the session, following the Asian session, we hit resistance at 0.8245, and following Weber's comments, we slid sharply. Now while here we didn't break below our support for the week at 0.8170, we do test it to end the week. Zooming this pair out, we see that we have been moving in favor of the pound throughout the last month. So we'll see if this trend continues. If we break below that 81.80 level, then we could target our lows from June 30th around 0.8070. If we look at the Euro-Swiss franc pair, in the beginning of the week we had moved higher in this triangle pattern, but then we broke below the upward sloping level of support yesterday, and then we slid sharply in yesterday's trading and extended those losses in today's trading, breaking below our lows for the week at around 1.3270. This pair too has been in a very sharp decline against the euro has been falling against the Swiss franc, and we've in the last 2 weeks eaten up all the gains that the euro has had since it started this rally in July. So here we actually will be coming close to a very important level of support, our lows at 1.3070 from June 30th. If this continues, it'll put pressure on the Swiss National Bank to see if it really is willing to let the Swiss franc appreciate so much against the euro without intervening in markets. So if we break below this June 30th level, definitely look forward to more news stories about SNB intervention. In a final euro pair, the euro yen, we see that we had support at 109.20, hold throughout late last week and most of this week with a downward sloping resistance trend line, and today we broke below that support, sliding all the way down to 108.20. So this is similar kind of to what we saw in the euro dollar, and that does open up the pair to further losses if this level, this old support level now turns to resistance, which it did in today's Friday on New York late trading. So the euro ends on a weak note, and we'll see if we extend those declines when we open up next week, if people are pricing in a more dovish ECB than perhaps we had expected. Switching now from euro pairs, we look at the pound dollar, and we see here too that the greenback gained overnight until it found support at around 1.5460, kind of matches up with this downward sloping support trend line. But here too we did move below our support for the week, which was the 1.55 level, so we cracked that, but we didn't stay underneath that level for too long, and then we did rally in the late New York trading. Zooming this pair out a bit, we see that today's low at 1.5460 is a very important level, as it had acted as resistance back here on July 15th, and then we broke above it later on in the month, and now we're coming to retest it as support. So if it holds, this could give a chance for the pound to rally from here, but if we enter next week and we break below this level, say we have further risk aversion, then we open up the pair for further losses or gains for the greenback, perhaps targeting the lows from July 22nd here around 1.5150. So we have to kind of see what happens once we enter next week's trading. Some bearish signs for this pair come from the fact that we broke an upward sloping support trend line this week, if we connect our lows from here and here, as well as the bounce down off of our 200 period moving average in the 1 hour time frame that we saw here. Currencies most closely tied to global growth outlooks and risk sentiment, like the Australian dollar, also fell to the greenback today, though here we did see a rally where in the New York trading we saw it pair most of its overnight losses. But if we look at the trend over the last 3 sessions, we definitely see a move towards risk aversion and away from the Australian dollar. Here too, similar to the pound, we're in a situation where an old level of resistance that was broken in the middle of July is now acting as support for the pair, and so this is the second time we've bounced up off this level this week. Now we did actually puncture it slightly in today's trading, and we'll see if this downward sloping level of resistance now holds, and if we wind up having more risk aversion and further weakness in growth-linked currencies. If we break this level, here too it opens up the possibility for further gains for the greenback. So while we have some tentative support here, we have to see how it develops when we start next week. In our second main commodity currency pair, US dollar Canadian dollar, we saw a sharp move in favor of the US dollar, rising up to 1.0510 for our high, which was a little bit above our highs from last week. So as we can see, we had a very sharp move in favor of the greenback during last week's trading, as traders priced in weaker global growth. Then we paired a good amount of that up move, but now we've reclaimed whatever we had retraced in the last 2 sessions. So we did have falling stocks in Europe as well as in North America, and oil prices were off 1.5%. So investors were seeking safe haven and sold risk, which in this pair means buying the US dollar and selling the Canadian dollar. The Canadian dollar was also pressured by some weaker than expected consumer price data. We had the headline CPI rise by 0.5%, though mainly on higher gas prices, and some changes in consumption taxes in some of Canada's provinces. But if we look at the core rate, we see that the monthly core rate slowed by 0.1%, and the annual core rate slowed to 1.6% when the expectations had for both of them to gain. So that could weaken the case for an interest rate increase in the next Bank of Canada meeting, which is set for September 8th. The Bank of Canada raised the benchmark rate by 25 basis points to 0.75% at their last meeting on July 30th, which it was the second increase in 2 months. So we'll see if this puts the brakes on the Bank of Canada's recent interest rate increases, and if they will take a more gradual approach going forward. Now that we've seen our main market highlights, let's take a look at some of next week's key US releases. Tuesday, we're going to get data on existing home sales, which are expected to show a rather sharp decline, as well as the Richmond Fed Index. Wednesday, we get durable goods orders, expected to show a bounce back to 3.1%. Wednesday, we get new home sales, expected to stay around their levels from the previous month. Jobless claims on Thursday, and then the preliminary GDP release, so it's the second release for the second quarter, which is going to expected to show a pretty sharp downward revision. Finally, on Friday, we have the final version of the UMich consumer sentiment. From around the world, Monday will bring us European flash manufacturing PMI and services data for the month of August, as well as New Zealand inflation expectations. Tuesday, we get retail sales from Canada and the trade balance from Japan. Wednesday, Germany posts its IFO Business Climate Index, and Australia releases its private capital expenditure. On Thursday, we get Japanese consumer prices, household spending, and unemployment rate. And on Friday, we get the revised GDP for the second quarter from the UK. And so that wraps up our coverage of the Forex market for this week. For more news, videos, and analysis, please visit our site, cmsforex.com. I want to thank you for watching and wish you all a great weekend.